Welcome back to the ProTickle Podcast, your Friday morning edition covering major financial magazine headlines, everyone.
It is Friday, January 23, 2026.
And if you're looking at your portfolio today, you might be seeing a lot of red.
Or at the very least, a lot of confusion. It's been one of those weeks.
Probably a mix of both. We're looking at a week that really highlights this huge disconnect,
Between what?
between the story the market wants to believe in and, well, the plumbing that actually makes the economy run.
The plumbing. That's the perfect way to frame it.
It just feels like we need a collective deep breath after the last few days.
Totally. Because on one side, you have the storytellers, right? OpenAI burning through cash to build the future.
Netflix writing these massive checks to win the streaming war.
Exactly. But on the other side, the plumbing is leaking.
The plumbing being the literal supply chain.
Mm-hmm.
We have Intel struggling to physically make the chips, and then we have geopolitical tensions threatening to just block the oil tankers.
Exactly. And usually by Friday, things start to wind down. But looking at our sources today, CNBC, Reuters, the Financial Times, it feels like the market is just waking up to some pretty harsh realities.
So today, we're going to dive deep into that tension.
We will. We'll look at why Intel's so-called beat actually felt like a huge loss,
And why NVIDIA's CEO is making what looks like a desperate trip to Beijing.
and the terrifying math behind OpenAI's, was it $17 billion burn rate?
Plus, we have to talk about the corporate soap opera that is the battle for Warner Bros.
Oh, yeah.
And why the word armada sent oil traders scrambling this morning. It's a messy Friday.
It is. Let's get into it.
Okay, let's start with the hardware, the chips. Intel, ticker INTC.
Right.
They dropped their Q4 earnings report last night. And, I looked at the headlines first, and on paper, it looked fine.
On the surface, yes. Absolutely fine.
I mean, they beat the top line, they beat the bottom line. Revenue was $13.7 billion, beating the $13.4 billion forecast.
Mhm.
They posted adjusted earnings of 15 cents a share versus, 8 cents expected?
Yeah. So explain to me why, when I checked after-hours trading, the stock was down nearly 13%.
Because in the semiconductor world, nobody cares what you did yesterday.
Ah, right.
They care about what you can ship tomorrow. And Intel basically told the market, we can't ship enough.
So this is the guidance issue.
It is entirely about the guidance. The outlook for Q1 2026 was soft. I mean, extremely soft.
so.
Wall Street had penciled in roughly $12.5 billion in revenue. Intel came out and said, actually expect something between $11.7 and $12.7 billion.
Okay.
But the revenue isn't even the scary part. It's the profit.
What did they say about earnings?
They're predicting break even.
Wait, what?
Zero profit.
Hold on. Let me just play devil's advocate here for a second.
Right.
We're in the middle of the biggest tech boom since the internet.
Right.
Everybody needs chips.
Yeah.
How does a company this big with this much demand predict zero profit for an entire quarter? How does that math even work?
It comes down to one word.
Which is?
Yield. Okay, we hear this term thrown around constantly. Yield issues. Break that down for someone who isn't a silicon engineer. What does that actually mean for the business?
Think of a silicon wafer, like a giant, very expensive pizza.
Okay.
You slice it into individual chips. Yield is just the percentage of those slices that actually work and can be sold.
So if you have low yield,
It means you're baking the pizza, doing all the work, paying for the ingredients, the electricity, and then you're throwing half of it in the trash because it's burnt.
so their costs stay the same, or they might even go higher trying to fix it,
Exactly.
but they have half the product to sell.
Precisely. And this isn't just speculation. CNBC spoke with Intel's CFO, David Zinsner, and he was surprisingly candid about it.
What did he say?
He just admitted they don't have the supply needed to meet seasonal demand. And the CEO, Lip Patan, he said on the call they're laser-focused on improving yield.
Which is so ironic, because usually the problem is a demand slump, right?
Right.
Here, the customers are lining up with cash, and Intel is saying, sorry, the oven's broken.
And the market punishes execution failures much, much harder than demand failures.
Because if the economy is bad, it's not your fault.
Exactly. Investors forgive you. But if your yield is bad, that is entirely your fault. It's just a fundamental problem with how you make things.
And to add insult to injury, while Intel is stuck in the factory trying to fix their ovens, their rival NVIDIA is dealing with a totally different headache.
I'd call it the headache of success
Mm.
and geopolitics.
This is the story about Jensen Huang booking a trip to China, right?
While Intel deals with manufacturing, NVIDIA is dealing with borders. CNBC reported that CEO Jensen Huang is heading to Beijing in the coming days.
Just before the Lunar New Year.
Right.
Now, the official line is that he's attending a company party.
Mm-hmm.
Does anyone actually believe the CEO of the most important company in the world is flying to Beijing right now just for, hors d'oeuvre?
Not a chance. No. Yeah. He's going there because NVIDIA's revenue from China is just evaporated.
And China used to be huge for them.
It was a fifth 20% of their data center revenue. Now, thanks to the U.S. export restrictions, that revenue is drying up.
But didn't they make those special downgraded chips for China, the H20s? I thought that was the workaround.
They did. But our sources are reporting that sales are stalling.
Why?
The Chinese buyers are looking at these chips and saying, this isn't worth the premium. Or, maybe they're finding other ways to get the real thing.
Or they're switching to domestic competitors like Huawei.
That's the other big fear. So Jensen is going there to apologize, figure out some kind of loophole.
He's doing diplomacy.
High-stakes corporate diplomacy. He needs to convince Chinese buyers to stick with NVIDIA, but without making Washington angry. It just shows this massive tension.
A real tightrope walk. And speaking of tightrope walks, let's pivot to the software side. We have a research note here from Deutsche Bank on AI, specifically OpenAI.
Yeah.
They used a phrase that caught my eye, make or break.
It sounds dramatic, but when you actually look at the balance sheet, it's pretty accurate.
So Deutsche Bank is calling 2026 a critical year for these AI developers.
Yeah.
We've been hearing about the AI bubble for a while. Are we finally hitting the wall?
We might be hitting a cash wall. Let's just look at OpenAI's numbers. Revenue was exploding. It was over $20 billion last year.
Up from what, $6 billion in 2024?
Yeah. I mean, that is incredible growth. Faster than Google or Facebook in their early days.
Okay, so if they're making $20 billion, why is Deutsche Bank worried? That sounds like a huge success story.
Because it cost them roughly $9 billion to make that money last year.
Okay.
And this year. They're projected to spend $17 billion.
$17 billion in 1 year.
Yeah.
That's a small country's GDP. Where's all that money going?
Compute.
Just processing power.
Every single time you ask ChatGPT a question, it costs them money. And unlike Google or Microsoft, OpenAI doesn't own its own data centers. They rent them.
So they have a landlord problem.
They have a huge landlord problem. And that landlord is usually Microsoft. But the Deutsche Bank analysts are waving a red flag here about the moat.
Okay, unpack the moat concept for us. If I have 800 million weekly users, isn't that my moat?
It would be, except for one problem.
Which is?
Of those 800 million users, only a tiny fraction are actually paying. The rest are free.
And in AI, every free user costs you real money in electricity and server time. You are literally subsidizing their intelligence.
Exactly.
Yeah.
And the competitive threat is that Google doesn't have to pay a landlord.
Right. They own the whole stack.
The chips, the data centers, the distribution, the source material mentioned that massive deal Google just snagged with Apple, right?
Yes, that was huge news.
That was a body blow to OpenAI.
Yeah.
If Apple is using Google's tech for its AI, that cuts OpenAI out of the most valuable distribution channel on Earth.
The iPhone.
The iPhone. If Google's model is 99% as good as GPT-5, and it's already on your phone for free, why are you going to pay OpenAI $20 a month?
That puts the rumors of an IPO in a whole new light. They're talking early 2027.
Yeah, and Anthropic is rumored to be targeting a listing this year. They need that public capital to sustain this burn rate. It's a race.
Can they get profitable before investors lose patience?
That's the question.
And, it gets even more interesting because it's not just AI burning cash.
Oh, not at all.
The traditional media giants are throwing billions around like it's monopoly money. We have a full-blown bidding war for Warner Bros. Discovery.
This has become a very bitter, very public battle. You've got Netflix versus Paramount.
And the gloves are completely off. I saw the quotes from Netflix co-CEO Greg Peters in the Financial Times. He did not hold back.
No, he did not. So Netflix has offered $82.7 billion for Warner Bros.
And Peters told the FT that Paramount's rival bid, which is technically higher at a $108 billion valuation.
He said it doesn't pass the sniff test.
Doesn't pass the sniff test. That is fighting words in corporate speak.
Yeah.
Why is he so confident their offer is garbage?
It's the structure of the deal. Netflix has the balance sheet. They're offering a deal based on their own financial strength.
And Paramount?
Paramount's offer involves taking on $55 billion in debt. It's a hostile tender offer.
$55 billion in debt to buy a company? That sounds risky.
Very. Especially if interest rates tick up even a little. And Peters threw some serious shade about the financing. He brought Larry Ellison into it.
Oh, this is my favorite part.
He told the FT that without Larry Ellison, the Oracle founder, who's the father of Paramount's David Ellison, personally financing this thing.
He said there is no chance in hell Paramount can pull it off.
No chance in hell.
Mhm.
I love when CEOs stop using PR speak.
Me too. It just shows you how high the stakes are. If Netflix swallows Warner Bros., they get the HBO library, the
Right,
DC
yeah.
universe. They basically win the streaming wars.
And Paramount is just trying to survive by getting bigger, but they're leveraging themselves to the hilt to do it.
It's consolidation fever, and it's not just in media. Capital One is making a move too.
Right, Capital One is buying the fintech startup Brex for $5.15 billion. It's a mix of cash and stock.
And in consumer goods, Clorox is acquiring Gojo Industries.
The makers of Purell.
For what, $2.25 billion?
The very same. So whether it's banking, media, or hand sanitizer, the big fish or eating the little fish, it's all about that spend to survive theme.
Okay, let's shift gears. We need to talk about the price of gas, because it might be going up. And the reason seems to be coming directly from Air Force One.
This is the geopolitical angle, and it is arguably the most volatile story of the week.
President Trump has renewed threats against Iran, and the language he used was very specific.
And aggressive.
He used the word armada.
Yes. He told reporters there is a U.S. armada and a big flotilla heading toward the Gulf, just in case.
Just in case.
Man.
Those words carry a lot of weight when you're talking about warships. How did the markets react? Because oil traders usually panic at this stuff.
They reacted,
Mm-hmm.
but maybe not as violently as you'd expect.
Mhm.
Brent crude climbed 1.1% to nearly $65 a barrel.
That seems modest for the word armada.
It is modest, and that's the disconnect.
Yeah.
On one hand, you have the president threatening military action near the Strait of Hormuz.
The biggest choke point for the world's oil.
Right. On the other hand, you have the industry saying, relax.
This was the quote from the Aramco CEO, right?
Yeah, Amin Nasser. He spoke to CNBC and claimed the energy sector is very resilient and the market is well supplied. He basically brushed it off.
So we have the president talking about armadas and the head of the world's biggest oil company saying, we're fine. Who's right?
That is the trillion-dollar question. The market is betting the rhetoric won't lead to a total supply shutoff.
But there's the internal situation in Iran. A source from HRNA mentioned a crackdown.
A huge crackdown. Over 5,000 deaths and nearly 27,000 arrests.
That is a staggering level of instability.
Exactly. So you have a regime facing massive internal pressure and external military pressure. That is a recipe for irrational action.
So if that armada actually engages, well supplied, could change to global energy crisis overnight.
Instantly.
It feels like the market is pricing in perfection, while the reality is anything but. And speaking of reality checks and supply chains, we have some news out of Texas involving Apple.
This is a really significant shift in the global supply chain map. We talk about reshoring all the time as this abstract concept.
But this is the concrete reality.
It is. Pegatron, a key Apple supplier, is finishing its first U.S. plant in Texas. Reuters reports it should be done by the end of March.
And they aren't making iPhones there, are they?
No, they're producing AI server products, the actual infrastructure for the boom we talked about earlier.
Why Texas? Why now?
It's a direct response to the trade environment. Taiwanese companies have committed to investing $250 billion in the U.S. to meet trade deal requirements.
We're seeing the physical manifestation of diversifying away from China.
A factory in Texas instead of Shenzhen probably costs more, but it's a lot safer from a geopolitical standpoint.
Absolutely. Finally, let's do a quick check-in on Europe. Davos was wrapping up, and the mood seemed grim.
Lackluster was the polite word CNBC used for the markets. But the mood in the room seemed much darker.
There was a specific catalyst, wasn't there?
Yes, Ukrainian President Zelensky gave a speech that was described as excoriating.
He didn't hold back either.
Not at all. He called Europe lost for trying to convince Trump, rather than uniting to defend themselves. That kind of rhetoric really hit the markets. European stocks were lower.
Was there any bright spot at all?
One, Ericsson, the Swedish telecom giant. Their stock popped about 11%.
What happened?
They beat profit forecasts and announced a huge 15 billion krona buyback. So, amidst the gloom, 5G infrastructure is still making money.
So if we step back and look at the whole mosaic of this week, from Intel's yield struggles to OpenAI's cash incinerator to the armada in the Gulf, what's the headline for our deep dive listener?
I think the headline is the cost of complexity.
How so?
Look at every single story we covered. We've built this global economy that requires insane levels of complexity.
Like chips that are almost impossible to manufacture perfectly.
Right. And AI models that cost the GDP of a nation to run, and supply chains that have to span hostile waters.
And what we're seeing this week is the bill coming due for all that complexity.
Exactly. The easy growth era is over. Now, you have to spend $82 billion just to stay relevant in streaming.
You have to spend $17 billion to stay ahead in AI.
You have to literally move your factory from China to Texas. It's a game where the table stakes have just become astronomical.
Which leaves me with one final thought for the weekend. We're betting everything on this spend to survive strategy. But what happens if the capital dries up? I mean, if interest rates stay stubborn, or if investors just get tired of funding these massive burn rates, we aren't just looking at a correction. We're looking at an extinction event for some of these giants.
That's the real risk hanging over everything. Can the profits arrive before the patience runs out?
Something to chew on while you watch the gas prices this weekend. Thank you for diving deep with us. We hope this helps you make sense of the chaos.
Stay curious.
That wraps up our coverage for today. That we'll see you all Monday morning with new headlines from major financial magazines.